My name is Arokya Das, AVP, Imaticus Learning. To give a more brief introduction about myself, by qualification, I'm an MBA in Finance. Also done my advanced certification in Financial Services and Capital Markets from IIM Lucknow. So that's talking about my industry experience. I have overall 21 years of experience. 17 years I have spent in operations, investment banking operations, and 4 years in L&D. I previously worked with investment banks like Society General, Citibank, and service providers like HCL, TCS, etc. So that's a short introduction about myself. Welcome to this session on collective investment scheme. So basically, you guys have heard about various financial instruments like equities, bonds, treasury bills, etc. Now, you might also heard about like funds, or it's also known as collective investment scheme. Now, as famously called in India, like there's a mutual funds, hedge funds. A fund is also known as a collective investment scheme. Basically, it is an investment vehicle. Now, how this fund or collective investment scheme works? So basically, there are investors who want to invest. Now, let's assume that there are investors A, investor B, investor C, and investor D. There are 4 investors, and each one of them want to invest about like $1 million in the market. Now, assume that investor A, B, C, D, they either do not have sufficient knowledge about the market or they do not have a time. So what happens, right? They approach your investment manager. Now let's assume that the Goldman Sachs over there is an investment manager. Now this investor A, B, C, D is there. Each will contribute about $1 million from their side. So total of there is 1 million each comes to $4 million each. Now that the investment manager who is like Goldman Sachs, what they'll do is they'll collect these investments from investors, and they will they'll invest in the market. They will invest in various securities like equities, fixed income, gold, etc. This investment over a period of time will generate returns. Let's say, for example, they start the investment with $4 million, and after 1 year, this becomes $4.5 million. So what we know that the fund actually generated $0.5 million of returns. Now this $0.5 million return, the investment manager will deduct all his expenses and pass back those return to the investors in the form of distribution. So this is how basically a fund or a collective investment scheme works. Now, if you look at this picture, right, you can see this person, like there are investors are there, and the investors approach a mutual fund or investment company and they contribute. As I explained that this is how a fund or a collective investment scheme work. Now, let's look at some of the examples of collective investment schemes. We have investment funds, we have mutual funds, hedge funds, private equity funds, alternative investment funds are some of the examples of collective investment schemes or funds.